We can't escape it, can we, what we're hearing from Donald Trump at the moment, given the global trade war that is upon us. Let's get some detail in terms of the advice, financially at least. Rob Gilmour joining us from Wealth Simplicity. Rob, good to see you again.
Good to see you again.
Such a difficult time for investors at the moment, isn't it? And those just trying to manage their household finances in the midst of an election campaign, which we were just talking about, that's on the move as well. So how should you approach this then, if you've got skin in the game? I mean, who doesn't?
Yeah, look, that's right. I mean, you can't really get away from what's going on in the US and the trade policies enacted by the Trump administration. These are pretty serious ramifications in terms of the changes that are looking to be implemented and really sort of directed towards altering the global world order. So I think one needs to be cognizant of the fact that it does take time for some of these things to play out, particularly market ructions. There's certainly strong indicators that we've seen a capitulation and perhaps a short-term bottom in the markets, and that has brought about a considerable amount of fear with investors as well. And one of our roles is particularly around sort of making sure that you have things in balance before you enter into these events, that you're not overly exposed to growth assets, and most importantly that you can feel comfortable staying the course and focused on your own objectives.
Are you perhaps looking at the possibility of recession, if not here, certainly globally, and the likely impacts?
Yeah, I think they're all saying about 50% of probability of a US recession. I think you just need to look at what's already happening now. And when you have uncertainty around trade, there are already instances where orders are being cancelled and things are automatically slowing down. And that's just a natural reaction from business. So I think the slowdown is definitely real, and the trajectory based on the current uncertainty does point to the likelihood of a recession in the US, particularly off the back of increased costs in the US domestic economy from those higher tariffs.
Now, it's often said you can't time the market. It is time in the market where you're likely to succeed. And we just look over the past week, that extreme volatility would have been nigh impossible to time the market.
Look, definitely impossible. And some of the moves we saw last week, S&P down 4%, 4.8%, down 6%, and then shooting up 9.5%. I mean, those numbers statistically crazy. And during that week, there were many conversations where investors were nervous, but if you'd pulled out at that particular time when fear was at its peak, you would have missed the upside. And I think that's the danger, that you do try and time markets and you can miss the best days of the trading year by getting out at the worst possible time. So back to my earlier point, it's about making sure that you're not overly exposed going into this, that your settings are right for your strategy, and that you can feel confident to stay the course, even though that might be the most uncomfortable thing to do.
Now, Rob, as I mentioned earlier, this all comes in the midst of an election campaign locally here. What should we be mindful of, given, and I think you're going to point this out, that we're on a very short turnaround as far as election cycle is concerned, given we're on 3 years, and therefore parties start throwing the cash around at this time. Should we be wary?
Well, I think the long-term budget implications, we possibly should be wary. We're talking about $1.2 trillion worth of debt, in the Australian economy. Not that we're anywhere near as bad as what, say, the US might be in terms of that situation, but it is clear from this election campaign that it is a bit of a spend-a-thon who can match the other in terms of political parties making promises, and the idea of any meaningful tax reform or measures to address the structural issues around the deficit are obviously not top priority, and that's not what voters will vote for. And that is also unfortunate, given we are constantly on a very short-term election cycle.
Now, just before you go, another issue in terms of, I guess, protecting your capital, any sort of investments or even money you have in the bank at the moment, as you're pointing out recent cybersecurity attacks, just how vigilant we need to be at the moment.
Yes, it's a very real risk that people need to be aware of. The risks around any financial transactions online, and they should view their superannuation account like any any bank account and have very secure methods of passwords and keeping those passwords secret. It came at a very, very unfortunate time when you're seeing markets moving significantly, and then a cyber attack that was coordinated across the Australian super funds. So it does point out that we need to be vigilant. It also is a wake-up call to the industry that they need to make sure that they're taking all the right measures in the background to ensure that their systems and processes are best placed to fend off some of these cyber attacks.